It's not my night. I'm talking to myself. I forgot to unmute the microphone. Right, let's start again. Trading is about, like anything else, it's about hard work, isn't it? Let me just. Forgot to unmute the. So, yeah, if you put the hard work in and if you have the knowledge, then you can come into trading and make a profit. So, yeah, I asked myself a question a long time ago. How are these algorithms programmed? Because you and I are trading up against algorithms. Every time we take a trade, most of the trades that are fired in any one day are fired from algorithms. So I think the question, how are algorithms programmed, is really pertinent to, really relevant to what you and I are doing every day of the week. So if we can work out what the algorithm's doing, then in theory, the percent chance you've got of success is going to be much higher. Nothing's guaranteed in trading, as you and I, anybody who's been trading for any length of time will know. But you can certainly, there are ways of stacking the odds seriously in your favour. And I'm going to talk about one aspect of that tonight. And so somebody said to me a long time ago, when they were doing a presentation, and they said, this is the code of trading. And I thought, hang on a minute, that's a real sweeping statement. What do you mean that's the code of trading? There isn't a code of trading, is there? Although markets, we all know markets are random and there are structures and patterns that you can lay over the markets. At the end of the day, then there isn't a specific a code to trading, is there? Well, I think the answer is yes. I mean, I took up what that guy had said and took it on board and did a hell of a lot of research into what he was, the method he was trading, and incorporated that and built that into my trade plan. I've been using it and adapting it ever since. So one of the things I'm going to show you, sorry about that mess, this is a video I did on Sunday. So I thought I'd use this as an example just to kick this off. This is a stock called CARD. You can just see that in the corner there, CARD. So as I was producing, as I called this video up, what struck me is the way in which this had sold off. This kept selling. That's as a trained eye, this did an enormous three-wave move and then continually sold. And yet here we are, perked up. So why would I sell that? Well, I was selling that, or I did sell that, because let's just listen for a second. I'll pretend you can see what I've done here. So you can see on the Sunday I've thrown the fibs over it. Okay, and if you could hear that video, you would hear me saying, I love this chart even more now I've put the fibs on it. So what I'm saying to you is that the fibs are the code of trading. Okay, so if the fibs are the code of trading, how can you exploit that? Well, this is just one way of many that, okay, this is one way of many that you can exploit the fibs. So if you look at this chart, this was a high of 97.60. That was the 2021 high, 97.60, and the 2021 low was 30.60. So that's an incredible journey that stock went on. Went from 30.60 to 97.60. Huge, threefold increase. And yet I was really keen on shorting it. So having put the fibs on it and realized that this had already failed at the 50% here on the 7th of January, Here we are on the 13th. Well, also, then I built the picture up of this resistance zone. I do like zones because that's where the hunters, the bear raiders, this is a good bear raiding strategy to me. I've used it in this sector many, many, many times. I'll show you some other examples. So all this did here on the 7th was fall short of the move from August 23rd. And so we'd already had a move on the 16th of June on the downside here. So this is a prime target. A structural failure here in June, a run up into this area and a consequent lower close in September, and then quite a significant push up here. This is a good sort of 5-wave move up here. But another reason why I was keen on selling it is that this wave here was quite short. Anyway, so it ticked a lot of boxes. It ticked the fibs 50% retracement, which to me is an ambush, what I call an ambush zone. It ticked the sell zone. We've got a history of selling from here, and I'll put on some more information to see if I can gather some more for you. Let's put the volume on. Oops. Put the volume on because it's the oxygen of any market. If you ever see a market come up on lower volume and you are long, be very, very cautious and even consider taking profits. Okay, so we were very divergent, very, very divergent at this high. But you had a big hint on the 7th. The fact it closed under the 50% on the 7th at 63.80, that was liable to short. Okay, now my mantra with shorting is get short and stay is get short the highest possible level you can. So I shorted the 64. It only ever went to 64.30 yesterday, and then you got that little doji effect. My stop was just above this area here. So my risk reward ratio was handsome. Having shorted into that fibs, that was my risk, tiny risk, and this is my reward. I actually think this could really drag lower. We've come into some support already, or very, very close to some support already. I actually think on a drop of that scale, I think we might still pull back here. Typically, I would look for a 50% pullback into that bar. So either this is going to continue just lower and just not give us much of a pullback. Nobody knows where it's going. Nobody knows what's going to happen. But I'm suggesting that this could really wind back. If, however, it consolidates and picks up into 58, that's still plenty of time to get short. And I would still happily add to that if it goes back to that 58, 60 area. Okay, so let's put the MACD on as well. These are my two favorite indicators, volume and MACD. Oops. And you will notice, what will we notice? I was going to look for any other divergences, but it's not actually showing it. This MACD was certainly bending lower on the Monday. It's only just crossed, of course, because we only just had the big drop. Were we divergent? Yes, the histogram was just about divergent. It's very, very shallow. And I think a lot of, I was going to show you another indicator, but it's an indicator very few platforms have got, so I won't show it. No point in showing it if you can't get it in your platform. But there is some degree of divergence there. So you've got, you're going up on lower volume. You've got the fibs, you've got a pink zone, pink sell zone. What else have you got? So that's 4 boxes it can tick. You could buy calls. I'm actually trading the underlying asset. But this is a UK stock. This is not a US stock, it's a UK stock. So excuse me, I would not use any other vehicle other than CFDs or the underlying asset. So, CFDs, I mean, your exposure in CFDs is minimal with a stop like that. So I think one simple way of using it is to trade it on CFD. I think the point is with a setup like this, you know, I did not know that was going to collapse like that. I think it's a trading statement they made. I think it's not results. I'll come on to your question in a minute, Stacey. So I did not know that was going to come. What I did do is just I stuck to my trade plan. I just stuck to the trade plan, stuck to my rules, because I do know if this works, it works well. And my risk was limited. So I think it's a fair assumption. So that was a fair trade for me. If you see a spider, right? Yeah, but 2 aspects of the volume. If you're going up on volume, it basically means the oxygen for that stock is limited. That the potential for that to go much higher with the volume coming off is extremely low. It's just a simple signal. If you're coming up on volume, then stay in it. If potentially, if you are coming up on divergent volume, then and you're in the long, then get out. Now, a volume spike like that, obviously, it's a very clear signal. But even with a volume move like that, you can still get a 50% retracement. I wouldn't be surprised to see that at least attempt to go back to 56. It might go and hit the round number 60. But the key to this was the fact we came was here. The fact we came up on low volume. That was the key for me. I can't think of any other examples that's done that at the moment, but I'll try and think of some. Okay, we did the same. No, we didn't do the same here. We initially came up on volume here, but then you got a sell signal. The sell signal was a new high in this range, immediate close underneath. And all it did was fall back to this big bar. So this big bar to the upside, it boomeranged back to that breakup area and then went on a run. But I'm expecting the same effect here. I'm expecting this to retrace just as this big bar retraced here, and then wing its way down. Okay, if we look at, yes, yeah, exactly that, Stacey. Volume is the key. If you come up on lower volume, the chances of that going further is I was going to say virtually impossible. Nothing's impossible in trading. Nothing's impossible in life. But that is normally a really strong indicator. If you come up, if all the waves are getting bought and the volume continues to push, the volume stays high, not necessarily breaks high, but stays high, then the chances of this moving up in the normal patterns is good. And the opposite's true. If you come down on heavy volume, then stay short even on pullbacks, and then see if you can. Ultimately, we need to break that low. It may not retrace to 50%. So what I would do in that case, if you want to get in this and you're not in this, I would offer out at in a CFD at that retracement. Unfortunately, at this stage, you're going to have a stop at least above 60, ideally above those highs. But that's a good example. Let's look at another case in point. Let's what am I going to show you? Let's look at something like let's look at this one. I did not short this. This is one I've been monitoring. Potential for a reversal. I did trade it as a reversal, got stopped out. Let's look at how this one, how it fell. Note how this move up here. So before the big drop, obviously you got a huge drop here, but before the big drop, there was no. That was a pretty decent move from 565 to 685, but the volumes were, although they did come up initially up until this point, they look how they dropped off before this. Oh, sorry. So that's the point in which the volumes kept climbing, and then after that point, the volumes fell off, really fell off. So we were divergent up until the 8th of September last year, and then they just pulled the plug. It broke the structure, broke support. So it looked okay here, and that's not a buy signal on the 21st of September. Close up for higher days off that support, and then started closing lower again. This is typical. One common mistake with traders with less experience, or even experienced traders, is if you see a higher close on major support, I would have thought a lot of traders were buying into that. If you've got a major drop, you're better off staying out of it and paying. If you want to get long for it, then wait for a higher price. Wait until it breaks above all that resistance, because all it's done is it's dropped, pulled back, and then entered the next main third wave to the downside. Looks as if it's going to pull up, drops. Now I started buying in here with a stop under here, and obviously got stopped out. Significant volume. Bought a pullback into that bar, held my stop under here, and then let it take me out. Okay, so that's an example. This is a subtler example of how that short worked. I'll come to that question in a minute. If we now stand back from this, let's see if we can determine some other factors to that short, because it wasn't an obvious short, unlike the one to me, the one I've just taken is an obvious short. This one isn't. Why isn't this obvious? Because it was certainly another rule I've got is if you get an untidy chart, stay away. If you haven't got a chart that's behaving in a regular fashion, and this is all over the shop to me. This is a ragged chart. I don't like ragged charts. So it dips a little bit, pulls up, drops, then comes right back up again. Looks all right here, then drops lower. Looks all right here, drops lower. It's not regular. You've got little moves, very difficult, mixed signals, very difficult to trade in my book. But the key thing is this. I think the most obvious thing in all of this chart is the lower volumes. It just didn't have any oxygen to make this, to break above these volumes. So basically, there wasn't any commitment of traders. There wasn't a commitment behind this stock to suggest that that could really break up. And again, when we break up here, we have the same story as here. We have a little squirt higher in the volume, and then it starts to drop off again. All right, so there were clues, obvious reasons to stay out of a stock like that. Now let's have a look at this key measure. Right, so if that is the fibs on that stock, okay, that immediately, the beauty of fibs to me is it just throws up some signals that you may have missed. What is thrown up to me is this heavy sell signal on the 11th of May. So by throwing the fibs on it, my eye went to that because that hit the 50% and dropped off. So in my book, what this has done is it has retraced into this sell zone, put another potential sell signal in there on the 10th of September, closed outside this signal. So at that 662 was a sell there with a stop above 685. And then you just break the structure. Once you break down on these with a pattern like that, once you basically lost your footing here on the 15th of September, it does pull back, pulls back into that bar at 650. So that's still shortable. Once the short's underway, if I'm not in it, I don't enter it. I like to. These reversals are sometimes tricky to trade, but the risk reward ratios tend to be much, much, much higher than typical trend trades. So if you find yourself with reversal setups or bear rating setups like this that don't work, well, always go in with a measured position size. Do not go over your trade risk parameters ever, particularly on a bear rating strategy that could not work, that may not work. But then once this breaks, so look how this bar closed underneath an extension level. So this 390 was a fib extension level, and it dwarfed it. So at that point, I think that's a fair risk to get short 50% in that bar with a stop above. I think this was definitely still tradable with a stop above 407, and then that does drift down in the subsequent days. So to me, that signal up there, so to cut a long story short, that signal on the 11th of May was retraced to in September. It matched the ambush zone fibs. So to the less experienced, this was a potential a new bull market here. To the trained eye, with fibs and a sell signal already in place and a sell zone in place, this was always a good potential short. And this is why this setup is not often used by traders because it is very counterintuitive. You have to know the exact parameters and sequence of events to match it. But if you're confident in using fibs like this and confident in your strategies, then you can pick up stocks like this. Let me think of another one. Well, I know what I was going to do. I was going to show this example. This is an old favorite of mine. I've not shorted this right. I haven't shorted this for a while. My mind went blank for a while. Yeah, you can see how I've marked this one up. Let me just take this. I haven't looked at this for a while. want to show you what the setups I used to use on this, because I was shorting. This is bricks and mortar. This is an old retail store in the US. So the reason why I was shorting it is because this sector was going through a heavy transition period, and it was selling very extensively anyway. I'll have to go to a daily. It's coming out the weekly, and then I'll finish up. Right. So what was happening back here? If you take, clearly, this was struggling. There's a lot of. We already had a significant sell on there, and then we had a breakup. Then we had a three-way correction. But once you look at that corrective wave pattern, and you realize, I'm struggling to show this. Hang on, let me try and get this bigger, because it's a really, really important point. For some reason it's not giving me much data. Okay, right. If I fib the initial leg down, you will note that we went into what I would call I keep calling ambush zone. So that 21.25 was an ambush zone and picks up on the main drop from 30th of August 2019. So to me, we had primarily a big sort of three-wave move here. This tool always does this to me. Then you get effectively a three-wave retracement. Into this drop zone, and that's a major drop zone on the 30th of April 2019. So at the point in which you look to get short, it's still looking bullish. This is typical of Elliott wave. The whole principle of Elliott wave is that you're trying to measure human emotion. You're trying to measure the price action against the previous wave pattern, the previous emotional response that the market had. And so once you fib that and you get the ambush pattern, look how it gaps down to the 1431 fib. Gaps back up to the 127, and it gets back down to the 161, almost retraces to the main breakdown zone, and then just works its magic on the downside here. So again, if you can, let's see if a pinball fibs works on this. So it's going to take the fibs from that initial move. I'm going to drop it down. Yeah, it does work. If I drop it down to that drop zone high, it picks up a zone resistance up there, and then gives you the 1182 move, and it just keeps going, doesn't it? But the main, you basically drop. In terms of trade patterns, you basically see, why is this? You basically see a structural breakdown here. You see several structural breakdowns, and then it just capitulates. So from 20th of Feb, oh here, yeah, okay, this is the COVID meltdown, isn't it? But if I could get more data up, I could show you how this came from a greater height, much greater height, because I was shorting it from 2018. So that's the major move up to 54.90. You got the ambush zone up there at 36. Well, the main level is 35.30. It gets to a high of 36 roughly, and then just breaks down. Absolutely breaks down. I think this is still shortable. even now. So we did actually 1, 2, 3, 4. That's unusual. 5 wave was the most powerful. That's unusual. Then you did a 3-wave correction. No, you didn't. Not really. No, that doesn't pan out. I take it away. But if you concentrate on just the fibs, you can see when we do, if you get a major drop, just measure that drop and then consider the best place to get short. And once you've got the measure of this, once you've got the code locked in, and look how the 1550 fib zone is the first support it finds in November 17. So you get a massive 3-wave move down to 1517 from a high of 5470. There's lots of, as anybody who knows anything about Elliott wave and fibs, there's lots of 3- and 5-wave moves in this, lots and lots. So you don't have to sit there for months on end with these setups. You can swing trade it over a week or more, or you could sit and really ride this one out. But like I said, I think this is still shortable. Well, let's just go back to the current daily. So we've seen a sell signal on the 19th of November. Get a lovely drop into support. There's the high, there's the range. And would you believe it, it's it's gap filled down there. Or certainly, there's not a clear gap, but it did gap up. It's gone back. It's boomeranged back to a gap up on the 14th of October. Technically, that wasn't an open gap. Anyway, that's the area it's chosen from. So from 37.65, there's your sell signal. There's your pullback to the bar. So from a high of 35.55, if you hold on, you get 23. If you fib it, I want to get out earlier, then 26.47 on the 2nd of December was a good place to get out if you didn't want to hang around. All right. So clear sell signals and look at the volume. If you take anything away from today, take away the aspect, what I'm telling you about the way in which to interpret volume. You come up on very limited volume, particularly once you come up here. You get one volume. Yeah, so you had very, very limited volume down here on that period. Very, very limited indeed. It was going up on thin air. You only get one volume spike up there, and then you get the sell signal. And then the volume drops off. So they're just walking away from it. There's no commitment of traders. You're not coming down on higher volume. Well, you do for a period. I'm surprised there wasn't more volume on the short side on that one, but certainly there was no commitment of traders on the long side. The sell signal is this. You get a new high in the range here and immediate close lower. And it must engulf for a good, reliable sell signal. It must close underneath the new high. It must. And then you trade into the sell signal. So I would, if I was shorting this, I would offer out on that retracement, stop above the high, and then set the target. So this short is a very, very technical, efficient short to me because of all the boxes. It ticks fibs, volume, sell signal, and just the whole history. In many, you could have just traded on the back of volume as well, on volume alone, because if you take everything out of there and just look at volume, that to me, that tells the story. You can't hold a high like that on lower volume. It's just not the way the markets work. If you ain't got the volume, the market maker's got no option but to drag that down. In my book, that the market maker's got no option. So like I said, so what would you do this now? Well, if you fib this new range, it's already gone back to 28.60 and sold. So ideally, I tell you what, I would set an alert for 31.85. I'd love to see this creep up to 31.85 and then get short again. Why? Because that would give me a great risk-reward ratio. It may not do it. The market maker, okay, I'll come to that in a second. It may not do it, but if it does get up there, this is a little bit like, not too dissimilar from the thinking behind my card short, the card factory short. But if I pinch that back, already you can see we're coming up on lower volume already. Okay, so I think that is a classic example of, let's go back to card. Just a reminder of what I did with card. Yeah, there you are. So the volume was telling the story. The fibs backs it up. Okay, so if you've got the market maker, here's the market maker. Sometimes you get more than one market maker, but there's the bucket of all the shares. Okay, that's the total. It's a nil sum game. There's a fixed float, what they call it, fixed number of shares in a market. So if a market's gone up and only a small proportion of this float is gone to buyers, there's your buyers over here. Here's your sellers, and this is the man in the middle. This is the market maker that holds the stock. So if there are too few buyers buying too little shares and it's going up, what the market maker's got to do is he's got no choice but to drag the price down. Otherwise, he can't find any buyers. He wants to sell as many shares as possible. You know, this market maker wants to put as many shares out there as possible, because that's the way he makes his money. If there aren't enough buyers, he's got to drag the price down to find more. If he drags the price down here and there are still not enough buyers, he's got to keep dragging it down. So here there weren't enough buyers, so he keeps dragging it down, and ultimately too many sellers come in too many sellers borrow these shares, or they borrow it from the market maker, and then sell them back once the price has dropped for a profit. Sells them back to the market maker once the price has dropped to close his trade. That's why whenever shorts take their profits, you see a bounce, because the sellers are, so the market maker is buying the shares back to close their trades out. Yeah, the market maker has to, if you've got a price ladder here, I don't know, it says sort of 50, 51, 52, etc., and there's nobody bidding on this price ladder, nobody putting in orders at these higher prices, you have to, the market maker has to drag it down. He's got to drag it down, otherwise the volume just evaporates. He's got to tempt buyers in. So and ultimately, if a lot of sellers keep borrowing the trades, and the bucket gets lower and lower and lower, and the price keeps dropping, at some stage, all these sellers over here are going to quickly sell their trades back. That's why you get a dead cat bounce, because as they take profits, the buy, that effectively operates as a buy. You see an increase in buying. I'm not saying it's going to happen here. I'm saying at the end of a run, you see the buyers come back in. Not because they're buying the stock up to hold it, because they're just closing their shorts. All right. So you just got to imagine the bucket of shares with the sellers on one side and the buyers on the other. So let's look at an example of, before I go, let's look at an example of a lot of buyers coming to the market. Let's think of something. Let's look at I've just sold out on Rio. Yeah, there we go. I've just taken profits on Rio. Too early? Maybe. Look how the price comes up on higher volume. So that's got support. That's got oxygen. Okay, right, brilliant. Listen, thanks a lot for joining me. Any questions? Any questions? Any other questions? Thanks for your questions, Stacey, by the way. Thanks. We can chuck some more questions here quickly if you've got time. Right, yeah, so yeah, this Rio was great for me. You look at why, before I go, let me just talk about why I bought it. We can see all my markings. Yeah, just we had a lovely move up here from, okay, we can always drop me a line or increase some chat in the WhatsApp room. That's why I bought it at 43.72. I bought it slightly higher than that. There's a breakout area from here. And it's just a fib zone. It's just a fib zone. Simple as that. So it looks as if this could go to 57. If this keeps going, it looks as if that could go to 57. So, but hey, it's I got about a 23-24% return on a relatively short period. So I'm just using the money to put it elsewhere in the market for Lovely setup, but this 43.85 area was the my main area of interest. It still looks like it's got legs. Would I buy it back again? Yes. If tell you what, if that pulled back to 50, I'd love it. I'll tell you what I had fun with last year, and that's Pfizer. I had great fun with Pfizer last year. Same story, really. Liked the. It's a fantastic pattern. That's an explosive pattern down there. So back down here in March 2021, it looked good. We broke up July. I love this pullback. Absolutely love this pullback. Yeah, and we went up to extensions. Right, brilliant. This is Pfizer. Cheers. Good fun. Thanks a lot for your time. Sorry about the login mess up. I have to double check that next time. Okay, let's have a quick look at Peloton. Yeah, I remember you talking about this last year. Ooh, yes. Yeah. I think it's got all the classic signs. It's got all the classic signs of a short. Certainly there. Back in September. Yeah, I mean, a very minor retracement into resistance there. Then it broke down again. So chart pattern, I mean, this is still really looking ill. I would personally, I don't like the sector. I'm very, very sector sensitive, and this sector doesn't do it for me. So we look as if we could come down to 1960. Yeah, that pullback was right into the fib zone at 53.40. Now, question is, what's the next big important thing? Volume. Coming down on volume. In fact, volume is still increasing. We're coming down on volume, and we have been for all this period. So we are convergent. We are not divergent. We are convergent with volume, which means the trend is, at the moment, it's still in place. At the moment. Yeah, okay. That's a very, well, I tell you what, if the short interest is that low and this keeps closing lower, I think you could see a capitulation. Because if there are many more buyers and sellers and this thing keeps dropping lower, you could see another 4th of November. However, if this closes above 34.50 anytime soon, then this could push up. But if we have failed that trend line test, we are closing lower on volume. So at the moment, there is no reason to buy it at the moment. I would only suggest this might push up if we close above that area. Well, no, I'll go further. You've got to close above that area. You've got to close above 37 to have any chance of that pushing up at the moment. Obviously, you've got support down here at 31.50. But if we close under or just simply break 31.50 and don't stop, it's coming lower. So let's just say at the moment, the path of least resistance is lower at the moment. No reason to buy that. And this is a very, very bearish pattern here, very bearish. Right. Well, like I said, at the moment, the path of least resistance at the moment is still lower. So we've got April 2020 support here at 29. Yeah, well, that's not happening at the moment. That's all I can say. You see, even when we came up here even when we got up here in 2021, it still came up on low volume. That was very divergent. In fact, I'm amazed it's gone that far. That was very divergent. So it was a great short. Yeah, short signal on the 25th of Jan. We traces into that by the middle of Feb. Yeah, I would not. This does not interest. It's never interested me on the upside since well, all of last year and certainly this year so far. All of last year. Just you know, that's not for me a stock. Brilliant. All right, I'm going to go and eat. Thanks very much, guys. I hope you enjoyed that, and I'll send you the link to the video. Cheers. Bye.